Yes, I've logged in already. You just log into www.taxpromax, then put in your password and input uh, password. Then you log in. It will open like this. Let me go back home. Here you see something like this. Then you quickly come to tax due. You click on tax due. Now the only tax we have here is just the CIT for 2023. That is what we are going to do today. So I'm going to be using a dummy figure for this so that for proper understanding and for easy progress. Now let's start without talking much. So we come to process. You click on process, then it will open up all this for you. Now this science here shows that this has been filed to this extent, but now we are going to start afresh. So you will see revenue. You click on revenue, then it will open. Check the account, your financial statement. You should be familiar with your financial statement. Then you go to your income statement. That is where you see your revenue. Then you click your Naira sign. Make sure you click your Naira sign. Then input whatever value you want to input, whatever value that is the income. But for the purpose of this tutorial, I'm going to leave it at nil. Then you come to proceed. Make sure you take care. If you do not take care, it will not go. Let's experiment it. I don't want us to experiment it. It's not okay. When you don't take it, it will not go. It doesn't want to take again. You process, then it will bring you to your non-current assets. Then you go to your financial position. There you see your non-current asset. Oh, sorry, you go to your fixed asset schedule. If there's any addition, this is where you add all your fixed assets, your plant and machinery and all that. Then here you click addition. It will bring you here. Now, this account has existing um, assets on TaxPromax. These are the existing assets. Now, you cannot remove this. Why? Because it has been imputed for the past years. Yeah, the only one you can impute is the one you can remove is the one you impute this for the current year. You can remove and add. Now, let's add so that let me show you how to add. You come here, you pick tangible assets. You have tangible and intangible. You pick your tangible assets. Let's just pick any one for the purpose of this tutorial. Let's say motor vehicle. Yes, we don't have motor vehicle here before. Yes, motor vehicle. Description, motor vehicle. The year, you check the year in which the asset was purchased, and it must be within the accounting year you are reporting. Let's say this asset, the motor vehicle was purchased January 2024. Let's say 4th January 2024. Then the cost of the asset. What is the cost of the motor vehicle? It will be on your fixed asset schedule. Let's say 2 million. What is the rate? You take the rate in which you are using to depreciate. Let's say 20%. Then you add. You see, once you add, it will come up here. But because we don't need it, I don't need it. Just for tutorial purposes. So I'm going to remove it back. You can even depreciate it and also remove it. So I'm going to remove it back. So it has removed. That's what I'm saying. You can remove the current one you put. But here, if I say I want to remove this, I can't. You write something here for me. You cannot remove it because this has been entered from the previous year, right? And now this depreciation, it has already been depreciated here, but we are going to reset it to start it afresh. You can come here to reset all the depreciation you've done. Yes, you have reset it now. It has come to its original. So if you want to depreciate, click here, depreciate, then you come here and say proceed. These are the steps I'm just showing you. Then you depreciate, you click on depreciate. Come here and say proceed. You've done, you are good to go. If you want to reset, you can reset. But if you are good with what you have done, you proceed. Then here, non-current asset group list. Here now, just put now. If I say let's proceed now, it's going to write that please fill out this field, right? We'll have to input something here. So what you do, you put 0 here. Here you put 100. Just do it like this and progress and proceed. Now it will bring it to your current assets. What are your current assets? Now, inventory is among your current assets. Once you click here, open up account receivable, debtor, prepayment, corporate tax, prepaid, and all that. If the current asset that you want to impute here is not among this list, you can always add. You go to others and add, or you type it that this is what you want, blah blah blah. You type it. But I believe it must be among the four. So then you just let's choose office. No, this provision and other payable. Let's go back to the normal this. So here you pick any of the assets. Let's just pick any office equipment, this fixed asset, this plant and machineries. No, I don't want to. So I will go back a little. Let's proceed again. This is where I want to come to. So you choose any, let's say current investment, no, let's say or account receivable. How much? You will check your financial position, right? So whatever you see there is what you input. Let's say 10,000. Let's say 1,000 for the then you add record. It will add. You choose another one, cash and cash equivalent. You add. Let's say 2 naira. You add whatever figure that is there. Just add it. Mind you, you can still remove all this. Then you proceed. Right after you must have add all your current assets, you proceed. But for the purpose of this lecture, we are not adding anything, so I'm going to remove it. I just showed you how you can add it. Then let us proceed. For the purpose of this tutorial, this account doesn't have any current assets. Let's proceed. Then you proceed. Then it will bring you to your cost of sales. You have opening, add purchases, all this. Just come down here. Other direct costs, if any. Then impute the figure you want to impute here. Let's say 1,000. Then you add the record. It has added here. Then if you are okay with it, you proceed. But for the purpose of this lecture, I'm going to remove it. There is nothing in the account. I'm just showing you how to navigate. So let's remove it. Let's proceed. If there is any, leave it and proceed. But here there is nothing. Let's proceed. Or then you come here, other income. If your account has other income, you look for the specifier. Is it commission income? Is it direct premium? Is it profit on sales of assets? Is it professional fee, contract, whatever that is your rental income, whatever that is your other income, you put it. If the specified one is not here, you can put other. Then you do the same thing, you add it and here now. Okay, let's just use it. You can delete if you want, but let's just leave order like that. You come here and you input 1000, then you add. You come here, you see, then you proceed. But for the purpose, I'm going to remove it because I don't need it. So it has come back to its normal. Then you just proceed. After you must have input that. Then here is your operating expenses. Then you go to your operating expenses in your financial statement. That's your note. You see it, your note to the account. Then you click management fee. You open it. Now, operating expense and management technical fee, you check if it is in the list of your operating expenses. If it is there, you add. If it's not there, you proceed. You come to interest on loan borrowed funds. If it is in your operating expenses, you add. If it is not there, you proceed. You come to your rent. If rent is in your operating expenses, you add. If it's not there, you proceed. But let's assume it's there so that we'll do one description rent, the ownership. Is it a company? Is it individual? You choose whichever. Then the address. Is it in Abuja, Ibadan, anywhere, Lagos, Akwa Ibom, Enugu, anywhere? You choose the address. Then you come here, the state. This is the address of the town, right? Why here will now be the state. You choose FCT. The purpose of the office, is it for residential, warehouse, or just office? You put office. Then the rent here start when? At times some start from January, some start February, some start March. So if it did not start from January and the accounting year is 31st December and it starts in January, then you are not going to prorate. Right? You just put the full amount there. But if it starts maybe in April, know that you are going to prorate to put the amount there. Then you put here the duration. This is just the duration you choose. Then you come here and put in the figure. Let's say the figure is 350 for 1 year. Then you add. After you add, then you proceed. But for the purpose of this video, let us remove because there is nothing there. Then let's proceed. Here we check operating expenses rate. If it's not in your operating expenses in the list, you proceed. Director emolument, if it's not there, you proceed. If it's there, you add and proceed. Donation, you check donation in your list. If it's not there, you proceed. If it's there, you add. Professional fee, if it's there, you proceed. If it's not there, you add. Now, should I use this one as an example? So, okay, audit fee, who is the beneficiary? You get to know the auditor that prepared the account that you put it in here. The corporate, is it corporate, is it individual, that you choose whichever. Then here you put the amount, then you add. But if it's not in the list of your operating expenses, you proceed. Continuous hand. This is other deduction. Once you get to this other deduction, that is where you put other expenses that are in your operating expenses, right? Other expenses that did not enter this the places where we just finished now, we'll now add all of them here. But please don't add salary, any maintenance, and bank charges here. You can add every other expense said that you've not added before here. But don't add salary, maintenance, and bank charges. Now, this is just come, let's say, transport and traveling. How much is 350? You add, it's adding, added successfully. Then you choose another one from the operating expenses. Which one? Printing and advert. You add is 880. You add, keep doing it until you add the whole of the expenses in your operating uh expenses. Yeah, the expense line in your operating expenses. So for the purpose of this, we are removing it. We don't need it. Then we'll proceed. After you must have add, you proceed. But if there's nothing there, you proceed. And the reason why I say you shouldn't add all those things is that they will come here, you come here and add them. Like you see management technical fee, interest, commission. If you have added them there, it will appear here automatically. Salaries and wages, I said you shouldn't put it before. So this is where you put it. Let's say your salary is 900. Once you put it like this, automatic. Now, these ones you cannot edit these ones. Why? It is coming from the other side. Commission paid can be edited. You can also re-edit this and remove the this thing. Repair and maintenance. You sum up the whole repairs and maintenance and put it here. Rent will automatically appear here if you have inputted it before. Rate the same thing, donation, all that, bad debts, bank charges, you can add it here. Professional fee will automatically appear here if you've included it before. Then this will now give you a sum here. That is okay, that's a depreciation. This depreciation will come here. That's the first thing we did. This depreciation where that we depreciated them will come here. Then all your expenses, others will come here. Then here you now have a total here. Now, this total here will involve everything including this depreciation. So for you to get your actual operating expenses in your account, what you do, you pick this total here, minus this depreciation out of it. It will give you what you have in your account. Make sure it is what you have in your operating expenses. That is what you are going to put here. So that your account will rhyme. Then after that, you proceed. You see that? Now, current liability. Remember, we did current asset. Now it's current liability. You go to your financial position also and pick one. Anyone you pick, account payable. Then here, the amount. Then you add. Then you proceed. But we are removing it. We are not adding anything. Then since there is nothing there, we'll proceed. Then you come to long-term liability. If there is long-term liability in your account, you include it and add, then proceed. If there is none, you proceed. Now here, this is the authorized share capital. Now let me remove this. It can be removed. Remove this. Now, if I want to proceed here, let's see if we can proceed without putting anything here. Actually, we can, right? But we need to put the share capital there. So let's go back. Let's go back so that we'll input something there so that I will show you how to do it. Now here, authorized share capital, the local, you leave it like that. What is the share capital? Let's assume it's 1 million. Then you add. All right. Now, if you proceed, let's see if proceed will work. It will work. But at the tail end, it will not go. So let's just do the needful here. Then you come here, you push authorize, issued and fully, blah blah blah, the same amount. That's why you see the 10 here like that. What did I do? Add. I didn't add and then proceed. Can you imagine that? Okay. Here now, so we'll have this like this, how it will look like. Then you proceed. Then you come to your reserve. This is your retained earning. What is your retained earning? As it is in your financial position. That's how you put it. If it is a negative one, you put minus and put it in figure. If your retained earning is positive, you put positive 200. Then you click it. If it's in negative, you put minus like that. Then you add. Alright, and proceed. But for the sake of this video, we are removing. Let's proceed. Then it will bring you to profit adjustment. Just proceed. Just proceed. Don't do anything here. Balancing adjustment. Except you want to do balancing adjustment, but just proceed. Proceed. Then the profit and loss, it will display here. Just proceed. Then it will bring it to your capital allowance. This computes capital allowance automatically, but if you want to if there is room for, let's say there is room where you can add something, you cannot add anything, you cannot alter it, it computes by itself. All you need to do here is just to proceed. Now you are done with the filing. What you need to do next is to come down here, company income tax form. You open it, it's loading. Something happened. Now, there's a ownership capital structure must be greater than 0. What is happening? Is it not greater than 0? Okay, let's do it again. That was why I said earlier that if you didn't get it here, it will show up. Let's use 100. Okay. Okay, let's proceed. Now everything is okay. You will now have this form like this. Because we don't have revenue, that's why all this thing is 00000. Non-current assets is displaying this. That is your fixed asset. This is what it is displaying. I think that is the only thing that display here. And your share capital, and what again? Your total equity, and what again? Profit adjustment, bringing your depreciation, and what again? Blah blah blah. Capital allowance. This is the capital allowance. All this thing is computed automatically, right? But once you impute any figure, here will be the revenue, here is the cost of sale. Your gross profit should rhyme with what you have in your account. Other income, if you have, going to show here. Operating income, Then operating expenses, the sum will show up here. Then your profit before tax will show you. It must be the same with what you have in your account, right? So let's continue here now. The tax liability here is zero because our revenue is nil. Virtually everything we'll find here is nil because I just want to show how we do the filing, right? So here now, I am not going to submit this. Do you know why? I have not filed this account. I'm going to file it. If I should click here now and submit, that means I have filed the account name. And that is not what the account is saying. The account is here with me to file. So I just say, let me use this, right? So I'm not going to do anything here. And in TaxPromax, you can start all over again. Where you find out that what you have here is not the same as what you have in your financial statement, you can start all over again and start from beginning. But then, once you get to this point, if everything is fine, click this tick button. It's going to bring out something. Wait, let me, you see, it's going to bring out this. You say, check the amount to be paid. So if the amount is not correct, please don't submit. Okay, we are not going to submit. We'll untick it. So now, after you tick it and submit, it will take you to where you will upload your financial statement. 1 megabyte must not be more than 1 megabyte. Then once in PDF format, once you upload it, it will take you to where you pay your, where it will generate your remitter. If you want to pay online, you pay. If you want to pay via bank, you generate and go and pay via bank. And once you done that, you've concluded the filing. So maybe I might still do that if need be, but how to file your CIT. Now, like I said, when you make mistake, you can actually go back. You can go back to home, come to tax due. You can start all over again. Despite it has been ticked, you can start all over again because I didn't submit. That is why. You can start all over again with your revenue. Start progressing like that, like that. Hope this video help. Hope this video help. Thank you. Thank you very much. You can always subscribe to my YouTube. See you.